All right, good morning, good morning, good morning. This video is going to be the trade recap for July 30th, 2024. And let's get right into it. All right, so coming into today's morning, I wanted to take a look at the news here. So we have consumer confidence and JOLTS job openings opening up at 10 o'clock. So that was something that we could have looked forward to. And let's take a look at the bigger time frame here, because this is a bigger time frame trade. All right, so coming into this morning, like I said, I usually tend to, if you guys watch my live streams or whatever, I tend to wait till the 10 o'clock closure. So I wanted to see how the 10 o'clock would close, would open actually, and just look at how the 8 o'clock candle closes, or 8-hour candle closes, and the 4-hour candle closes. So let's backtrack here just a little bit. So notice, look at this 4-hour candle right here. This is the 4-hour candle at 10 o'clock, and this is the 8-hour candle. So based on how this 4-hour candle and this 8-hour candle closed, I can anticipate, right, for us to take out this 4-hour candle's low and this 8-hour candle's low. On the lower time frames here, I notice, okay, so we have Asia's lows still intact, and we have London lows still intact. So here I'm already thinking, okay, we could probably attack those lows, and like based on how this 4-hour candle closed, I can anticipate for us to take out this 4-hour candle's low here. But on the lower time frames, there wasn't any entry for me to take, and I kind of just had to watch prices just displace lower. And whenever I say displacement, I mean whenever you see this price move down, there's fair value gaps that gets created. So here's a fair value gap on the 30-minute time frame, and like I said, I couldn't have taken any of these trades here because there was no entry, there was no entry pattern here. One trade that I did notice here was actually this one. So based on this 15-minute candle, right? Based on this 15-minute candle's power of 3, what can we anticipate for us to take out this candle's low or this candle's high? If you answered low, you got the question correct. So it's not, you don't take the trade based off just based purely off of the power of 3. There has to be more confluences there. So do you understand what the higher time frame draw is here? At the time, we just took out July 26th low of day, and we're relatively close to previous week's low. But I would have preferred us to trade back inside a fair value gap to attack the previous week's low, not go straight down there. So for this trade, if I were to take this one, it would have been just to take out this 30-minute low and maybe some standard deviation projections. So this one, notice how it's also in alignment with this 30-minute time frame, this 30-minute power of 3. So if you were to take an entry here, you would have probably taken your entry based off of this 5-minute fair value gap, and trade would have maybe looked something like this. But look, you see how it's a 0.52. This isn't a trade where I would have taken it, because the risk to reward isn't all that great. You're risking $1 to make 50 cents. That's no good. So even though I can't anticipate for us to take out that 15-minute low and that 30-minute low, and for this 30-minute to be this 30-minute fair value gap to be a breakaway gap. So the reason why I say that it's a breakaway gap is because of how we closed here on the 30-minute time frame, right? So like I said, I can base my trade off of the 30-minute low being taken, right? And I don't anticipate for us to retrace back inside that 30-minute fair value gap and then take out that 30-minute low. I anticipate for us to open on the lower time frame enter on the lower time frame PD array and then take out the 30-minute low. And after taking out the 30-minute low, if we retrace back into here or whatnot, that's not my concern. My concern is just that small move up into that PD array, into the lower time frame PD array, and to target that 30-minute low. That would have just been, that's the model. But like I said, the risk to reward here is kind of great. It's pretty big, to be honest. And yeah, I just wouldn't have taken a trade there. So the trade that I did actually end up taking was, so fast forward just a little bit here. Oops, I've gone a little bit too far. Okay, so going back to the hourly time frame, I want to show you guys what the 6-hour candle closed like. Notice how this 6-hour candle closed here. This one right here. What can you anticipate for us to take just purely based off of its power of 3? The 6-hour power of 3, right? I can anticipate for us to take out this 6-hour low. This 6-hour low here. So I'm anticipating for us to take out this 6-hour low, right? So like just purely, there's no technicals here. It's literally just based off sight. Just based on how this candle closed. Are we anticipating for prices to do something like this? Take out the candle's high and then take out the low? Or will we, you know, open, create that high and then take out that 6-hour low? That's what I'm anticipating. So I'm anticipating for us to take out that 6-hour low. And notice how it's in confluence with this hourly low, 30-minute low. So there's that 30-minute low and that 15-minute low. So I actually went a little bit too far here. So like I said, that 6-hour low is in alignment with the 1 hour, 30-minute, and 15-minute. So there's time frame alignment there. That's the second aspect of my time frame alignment concept. You can check that out in my YouTube videos. So this is a time where I usually wait to see how we react at the 15-minute fair value gap, but I'm trading a little bit more aggressively here because previous week's low seems to be, I'm anticipating for prices to take out previous week's low today. I even stated this like on Sunday. NQ. Based on the weekly power of 3, I can anticipate for prices to take out previous week's low. So that was coming into this week, I was already anticipating for us to take out previous week's low. And today so happens to be the day where we take it out. And let me show you guys what the power of 3 is for the weekly time frame. Take a look at this weekly candle right here. So, like I said before, fair value gap theory. What can we anticipate for this weekly fair value gap to be? A breakaway gap, because I'm anticipating for us to open on the weekly time frame, on the daily time frame, or on the lower time frames, we enter off of some sort of PD array to help us take out the weekly low first. I don't want to see us take out that weekly high and then retrace back all the way up into here and then take it out. That's not efficient. So I'd rather see us take out weekly low first, and then from there, that's when, you know, you let time do its thing. But so like I said, coming into this week, I was already anticipating for us to take out previous week's low. And my trade entry here was actually at the 15-minute fair value gap. So I was anticipating here, right? And notice, you guys are getting a lot of sauce for this video, not gonna lie. So this is the 30-minute time frame here, right? What can we anticipate for this 30-minute fair value gap to be? A breakaway gap. Reason being, notice how we closed. This 30-minute candle closure, what can we anticipate for us to attack first? I can anticipate for us to attack the 30-minute low, and then from there, I don't care what we do from there. That's just the objective of my trade. And like I said, we leave that 30-minute fair value gap to be a breakaway gap, and I enter off the 15-minute fair value gap, and I'm targeting previous week's low. Notice I have my stop loss here at basically the fair value gap high, because I don't anticipate for us to, you know, trade past the consequent encroachment. So I just have my stop loss not here, but at the fair value gap high. So I was willing to risk that trade. And let's see on the 1 minute, what do we do here? So we open up at 12 o'clock. Notice this is the 12 o'clock open right here. We open, we come really close to taking out that 6 hour low, but we don't actually end up taking it. See? So you see that little small space right there? We didn't end up taking that 6 hour low. And then we retraced all the way back into the 15-minute fair value gap, which was my entry would have been right there. That's my entry. And my stop loss is right here, stop loss right there, and I'm targeting that previous week's low as my terminus. And boom, this is a more of like this isn't a scalp. I feel like this is more of an actual day trade. It's a little bit like I held this trade for, let's see, like 12:08, 12:50. So it's like a 42-minute trade here. And yeah, that's basically that's how I handled the trade. Pretty simple setup, targeting 6 hour low. It's in confluence with the weekly draw of liquidity, and yeah, kaboom. Very simple, very, very simple. What else do I want to talk about? I think that's gonna be all, to be honest. Yeah, really, really simple setup. Today was a very clean day. I was anticipating for us to take out July 25th's high of day, but like I said, I always wait until the 10 o'clock open until I can start looking for trades. And by the time we close at 10 o'clock, it didn't appear as if we were going to take out this high anymore, because we disrespected some fair value gaps on the left side. We disrespected BISIs, and yeah, we just displaced lower from at the 10 o'clock open. And like I said, I didn't chase any of this move down here, so I missed basically this entire portion. I basically missed this entire portion, but prices was able to allow me to enter off of this fair value gap here to target previous week's low, which is, like you said, I'm just getting a small piece of the pie, which is what us traders are. We're as day traders, we want to get just a small piece. And there's a book, Investing Like a Shark. It's this one right here. It talks about how sharks, you don't want to be, taking the entire move, because that's what the institutions do. But us as day traders, we want to take small bites, and this book talks about it. Not everything in this book is actually like I would recommend reading, or not reading, but it's an okay book. I feel like the only thing that I actually got from this book was that you want to take small bites from the markets. You don't want to. It's okay to not get the entire piece, but getting small bites from the market is for sure like something that you would want from here. And James Cramer. I feel like this is the scam dude from CNBC. Like, you don't want Jim Cramer. Yeah, that guy. You don't want to be trusting that guy. But like I said, not everything in this book is reliable, because I don't know. But for sure, you always want to take small bites of the market, which is what I just did there. I took a small bite. I didn't, very, very small. But if you position size right, that small move can turn into an entirely bigger move. But yeah, that's gonna be all for the trade recap video today. Very simple trade, in and out of the markets. I'm not gonna do, intraday market analysis or anything like that, like for preparing for tomorrow, because tomorrow we do actually have FOMC, and yeah, that's kind of pretty big. So from there, I would have liked to just wait until prices close today, and then I'll give you guys, or if you guys are actually in my Discord, that's where you guys can check out that's where I'll put my my intraday analysis. If you guys join that, I'll post it on there. If you guys aren't, then you're not gonna get it. Thank you guys so much for watching the video, and I'll catch you guys later in the next one. Peace out. Bam.